Let's welcome in Peter McGuire to get us more. Peter, good morning and welcome to the show, and a pleasure to speak to you as always.
Lovely to see you, Hiral, and to everyone, and including yourself, of course. Happy Diwali and lovely time for you all in India. So celebrate, please.
Thank you so much. Wish you the same. And watching out for India, Australia soon, hopefully in the finals.
Yes, well, it will be one dynamic. If we're in the final together, it'll be a game like no other, I'm sure.
Peter, you should be in India, I'm sure, with regards to the World Cup now. So we'll talk about it in a bit. But very quickly, in terms of crude, this is something where we've seen at a 3-month low now. What are you picking up on it? I mean, is that a trend that we will see that downtick that will continue? Or are you expecting this to be a short-lived correction?
Well, I think a number of things, Hiral. You've got to look at, if we look at economically and look at those export numbers as far as what China announced on Tuesday, they were very, very poor. So that gives you an indication as far as global, I suppose, consumption patterns, because they make products for the world. And if the exports are slow, then that's telling you that it's weak demand. Secondly, of course, the war premium seems to be stripped out of that Palestinian-Israel situation. And there was probably $4 to $7 or $8, if not more, that was wrapped up in that from a war premium. So that's been stripped out. And the third thing, of course, is that the steam's come out of the market in the sense of how we're looking heading into Christmas, demand picture, geopolitics, but geopolitics has settled down. The Fed said there won't be a rate rise. You've had a very strong push on US equities over the last week and a half. And maybe that's going to continue over the next couple of days as well. So I think all of those factors in turn have pushed crude off and pushed it down solidly.
Right. So, Peter, we've been hearing of weak demand prospects with regards to China and Europe. There is lack of supply disruption as well from the Middle East conflicts. And you have US inventories which are rising as well. Do you think these three factors could actually weigh down on prices then?
Well, I won't be surprised, Hiral, to see, maybe a few more dollars pushed to the downside. No one knows how low it can go. I mean, it might bounce at, $73, $72. You've got WTI, as you mentioned, 75.5. So there might be a few more dollars. We don't know where the floor is going to be. And if there's no bad news, then that's a good sign for the consumer, because oil prices should give up some of that heat. The other side, of course, is where are we with OPEC Plus? What's the situation as far as production, and where are the Saudis and Russia thinking? They want naturally higher oil prices. So it's a little bit of a battle at the moment. It's a tug of war, and I'm not sure who's going to win.
So, Peter, on the tug of war, what's the downside that you're watching out for in terms of crude, and where would you cap the upside?
Well, I'll answer the upside at the moment. Without any war premium built in and no geopolitics, and if the current status quo lasts till the end of the year as far as relatively good numbers with equities and there's no disruptions or no black swan events, then possibly 85 is where crude is probably going to see an upward level. As far as a downward, you might see support at the $70 range. Let's just see if it gets down there, and then how much further or how much momentum it has. I'm referring to WTI also, considering it's now at $75.
Right. So that's going to be interesting to watch out for from here on. Thank you, Peter, so much for joining us on the show, and hoping to speak to you if India and Australia do play in the finals, and we'll see where we go from there on. Thank you. Stay safe and speak to you soon again.
Thank you, Hiral.